Good morning, traders and investors. Thank you for tuning in to Pre-Market Prep on Thursday, February 20th, 2025. We'll have some of these Momo names turned into no names. The guys are going to discuss that a little bit, talk about some retail darlings and what's happened here with some of the Momo names. Maybe after that move lower in Palantir. Heads up options expiration tomorrow. Might talk a little bit about the AI stocks following a report on Microsoft making some breakthroughs in the quantum space. Earnings, guys, are going to discuss here this morning. Walmart, Alibaba, Carvana, maybe a little grab. Earnings after the close tonight. Square, Booking, Rivian. Heads up at 8:30 a.m. Eastern time. Weekly jobless claims. And at 10 a.m. tomorrow on Friday, existing home sales. Our guest today at 8:35 a.m., Jim Tassoni. He is CEO at Armor Wealth Strategies. We're going to jump over to Joel to take a look at the markets here in just a sec. But first, that pre-market prep intro.
The volatility right now is really incredible.
Wow, look at that consolidation on the upper right chart.
You know what we've seen this earnings season? Some of these expected moves get even more violent. And this is why I have switched my strategy 10 years ago. And if you're chasing, you're in trouble.
All right, good morning, traders and investors. Starting out a little bit in the red after making a all-time closing high in the S&Ps. We're down 16 and a quarter handles at 61.4675 off the pre-market lows. The buck down 23 cents, 106.83. Let's see what that chart has to say. Little consolidation after the break. TLT, that's up 40 cents, 88.61. No clear direction unless you're trading off that 50-day moving average. Let's call USO flat, 77.48. Gold, another new high, but a tight range. GLD up $1.65 at 272.50. SLV, I've been talking about 30. Well, there we are. We're up 24 cents at 30.05. And Bitcoin futures, they're rallying off that breach of the 95 level. They're up $1,275 at 97,580. I feel a well-organized show today. We're going to bring on Dennis and Christian. Dennis having a wild day yesterday. Christian, his calm, cool, and collected self. How are we doing on this Thursday?
We're doing good. We're doing good. It's an interesting day, to say the least. You've got definitely some separation happening. And I mean, the elephant in the room is going to be Palantir. You know, the big fall that it had yesterday. Christian, were you watching the Momo names, and how were you approaching them?
Yeah, I mean, some of these things are just, they've gone ballistic or exponential to the upside. So, we saw this the other day, not to say that Meta is an exponential name or anything like that, but we know that trees don't grow to the, the stocks don't grow to the sky like trees, and they're due for some pullback. And Palantir is one of those names. I think that there's a bunch of these names that could have a little bit of correction from the upside, but and I think that that's healthy. I think that some of these names that have gone up so much like this coming down a little bit. I talked a little bit about weaker seasonality in the second half of February. I think that's a good thing to see some of these things, because I know that you guys have your eyes on a couple of them, and I'm noticing some of the pullbacks, and some of them I think have just gone a little bit too far too fast. We talked a little bit about HIMS. That's in my category of very overbought, but yeah, I think it's welcomed at this point.
I think so too. So let's talk about my trade yesterday, because I tweeted it out. I went short Palantir at the perfect spot. Got short 124.15. I knew 125 it had top, so I shorted it, after the 125, and I was like, there's a double top there, and I knew there was a size seller up there too. So I'm like, there's somebody.
How'd you know
really...
that, Dennis?
Did you see the book? Yeah. So you knew there was a size seller up at 125 too, and I'm like, I don't think they're going to get them done. And the stock started selling off, and it went 2.5, 3 points in my favor. And then I'm like looking at it, and I'm like, unfortunately, Palantir is a stock trade you really need to manage. You need to, like, when you're shorting something like a rocket ship like that, You need to be able to manage it. Unfortunately, I had a doctor's appointment at 11 o'clock. So I'm like, I had to leave my desk just after like 10, quarter after 10 to go to my doctor's appointment. So I'm like, I'm going to put a stop above this at 125 because I know the seller's there. And, I don't think its stock was like 123 and a half at the time. And I'm like, I don't think, that it's going to take out that seller anyways. Obviously, the stock went up there. It literally stop hunted every 125 because I guarantee you I wasn't the only stop just above 125. So they took it up there, stop hunted all the 125s. They really did. Stock went up. My cover was almost the exact high, just below it. I think it was 2 cents below the high of the day. So there was multiple highs, like in that little bracket. Those were all stops getting executed. That was part of me as well. Came back to my desk. Stock was back down to 123, and I'm like, crap, they stop hunted me. So I'm like, oh well, it happens to the best of us. Obviously, I hate using stops, but in some cases you have to. Stop was obviously too tight. 2020, I'm not blaming the doctor. Stop, it's on me. Stop was too tight for a stock. On a stock like Palantir, you've got to give it more than a buck, which I did not. And then the news comes out, and I'm like, are you kidding me? Obviously, the news is not what CNBC is talking about with, the CEO selling shares. It's not the news, folks. The news that moved the stock yesterday was the Trump administration ordering the Pentagon to plan, sweeping budget cuts and obviously, over the next 5 years. And that was, hitting defense. So budget cuts across for defense. Palantir, obviously, a lot of their revenue coming from U.S. government defense. They hammered the stock. So my jaw hit the table. I was like, are you kidding me? So I literally got stopped out basically at the high of the day, which is a horror story, but it happens. I mean, it happens. And the stock started tanking. So what do? Do you sit there? Do you cry? Do you say it's not fair? No, you don't do any of this. You adjust and you trade and you move on. And what I started to do, and I asked everybody last night, I'm like, what's your favorite Momo stocks? Because I think the Momos are going to probably start to sell off. So I was able to get short Hims. I shorted Apple Oven. I shorted a bunch of other stocks. Some of those have worked very well. So I do think we're at this point here where Palantir is your leader. But I think today is a very important day for all those Momo names because we're seeing momentum break not only in Palantir, but in some other names as well. And to Christian Fromhertz's point here, Hims, very overbought. I did cover it last night, but I may reinitiate it too because it went from 68.5 down to like 66.5 last night again. Pop back up here, maybe giving us another shot, maybe not. But I want to get Christian's thoughts here too on the moment.
Can we finish up the Palantir first before we go to that? Because the news came out at 2:55. Right here is where that Trump news came out. Right after, and I looked on the stops, and they traded pretty good volume there when they took you out. But right here, this is a 5-minute chart. This is when the Trump news came out. So I cannot believe that anyone is calling the catalyst for this guy selling stock because he's actually selling a little bit of less stock. And he's crazy for not selling all the stock. But there you go. That's what.
Yeah, he's sold stock before. This isn't the first time we're seeing it. It's something like $3 billion worth of stock sales have happened on Palantir over the course of the last couple of months, and 0 buys, not one buy, $0 in buys and $3 billion in sales. This is way overdone. It's just way, way, way overdone. Like, I mean, is this the end of it? Who knows? Momentum can recatch. It may not be. Is it the short-term top? Probably. I mean, you caught a lot of people here, and that's why, Christian's our Momo trader, so this is his expertise here. You obviously, when you're trading Momo stocks, you have to be very cautious with the risk management of it because these rug pulls happen, Christian. Like, what do you do? Do you anticipate these types of rug pulls when you're trading these Momo stocks? Or do you, just have levels and say, hey, look, if the momentum breaks here, I'm going to get out. How do you manage risk? Like on a stock like Palantir, for instance.
Yeah, I mean, well, first of all, I don't have a position in Palantir, and I kind of just watched it go up, and I wish I could be a little bit more like unemotional because these moves up and the moves down, you can make money in both these situations. If I was trading something like this, because I do trade some names that go up like this, I just I take profits as we go up. I usually take 50% of the trade off for profits. And then when something's rolling like this, I let 50%, continue to go. And then I use a trailing stop. So I have an alert that basically tells me if it's breaking like a trend. And that requires a bit of management. You have to continue to kind of, you know, readjust that limit price so that you're constantly just letting price action do what it's doing, let it work for you, but you also have to really monitor, especially something like this. And that's what makes me a little bit nervous for names like this, is that they can move very, very quickly, as you've seen. So that's how I handle it. Another thing too is like, I think it's very difficult to pick the timing to short some of these things, like a hymns, or what you could do is, as well as, like, I like, even though they're expensive, but I think that's where options really come into play, because you'll see these drops happen, and they will knife through like 5-6 days of price action. So even if you're wrong for a couple days and you don't pick the time perfectly, you can only lose the pre. So if Palantir or whatever name that you're trying to short continues to go up for another 5-10 days, because it's very difficult to pick the top in these things.
Yeah, for sure.
If you can only lose the premium of your option, and then if they get smacked, you will get rewarded if it knifes through 5-10 days of price action. So that's how I like to play. If I'm playing something on the short side, I wouldn't do it via stock. Just as Meta's a great example. Like, did you think it was day 10, day 12, day 13? It went up 20 days in a row. You can't hold the short into that. That's crazy. So, that's how I would approach it, is to use a put option, and
Good
maybe
call.
have the ability to to add to it on the short side.
The one issue with it, obviously using puts, is the premiums you're paying. Do you usually do like some type of spread or something then to try to bring some back in? Because obviously when you just if you're just sitting here and buying options on all the high flyers, you're probably in the long run going to lose with that strategy. But I mean, if you make your timing right and you've got obviously some spreads on maybe and bringing some premium back in, so would you just like buy puts, or you like look and say, I'm going to buy like, let's just say on Palantir, for example, I'm going to buy the 120s and sell the 110s. Like, how do you approach that, Christian?
It could be. It depends on the implied volatility of the option. If it's a really expensive option, absolutely, I would do a spread. But you're not going to get these big, like, bang for the buck, like, hey, you got in for $3 and you're getting out for 15. But also, you can't get into a Palantir option like right around the money for $3. Like, it's the premiums are too juiced for something like that. So yeah, you could use a put spread. I mean, that's how I would do it if it's one of these names that are really volatile. But again, it's all going to depend on the implied volatility of the option.
So this is going to be a
final
Momo.
technical thought. Looks
sure,
like it has
please.
a date with 100. I mean, like, if you hold this and you're like, hey, I want to go long, I want to buy this dip. Well, I don't know. It just looks like it has the 3 lows after the gap up after earnings. Like, maybe sneak into the gap a little bit, form a little base, and then you're going to have a great retracement eventually. And I don't know where this down move is going to be, but from this 125.41 high, let's say we make a low at 105. And then boom, we get, and I know some analysts came out defended today, and you get a rally, and it goes back up to 115. And I'm just doing this. I don't know where the low of the move is going to be yet. Maybe you get 1 or 2 lows. So if you're looking to buy it, man, I think you're risking down to 100. And if you want, you don't want to sell this in a hole, there's going to be a bounce. This is Palantir. But put Dan Ives on TV right now, and this thing will rally $10. So
yeah, and that's the point here too, is the media, even last night. So after the dip, you get Loop Capital coming out. Like, every analyst is a buy the dip mentality here too. And Loop comes out last night and puts a buy rating on it, when the stock closed at 112.06. So after the huge down day, they said the note was titled, or it had it in there, hold your nose and just buy. I mean, like, that's your investment advice here, Loop Capital. It's very interesting, But what I would say is, I never buy on day one after a washout move like that. I never buy. Write that down. Never buy on day one after a washout move. They hardly ever work because there's almost always follow through. Today we are seeing follow through. So Loop's already down $5 on that call because it's down another 5 points since they put the buy rating on it at 112. They were so excited They're like, oh, we're going to put this on at 120. We get to put it on at 112. We're marked better. That's awesome. But there's almost always some follow through. It's my 2-day rule. It's one of my core trading strategies. When you get a big counter move, there's almost always at least the next morning some follow through. And that's exactly what we're seeing here today. It's not just Palantir here, though. The Momo trade really came off with Palantir. It was definitely your leader, but a lot of other trades, like look at SMCI. SMCI, right when the Palantir started to dump, SMCI went into a free fall too. And SMCI wasn't in their own news. It wasn't like BDO all of a sudden found something. That was pure momentum coming out. Because why does that happen? Because the same traders that are in Palantir are the same traders that are in SMCI. All these stocks are related because they got the same type of trader in there. So if you look at SMCI, it coincides perfectly with the Palantir sell-off there. So if you bring up Palantir, you'll see SMCI selling right off at the same time. Went from 65 down to 56 in like 20 minutes. That's a 20% fall in 20 minutes. Just very significant. You are bouncing here a little bit off those lows. You know, we're down $2 this morning. But I mean, you know, just like last night with the tweets, I'm asking people, what are your favorite, you know, momentum plays that you've been in? Because I think those are the ones that are going to come off. I'm looking for stocks to short. So, you know, SMCI would be one. It's obviously come off significantly there. But, you know, I don't think anybody mentioned this one, but I was already thinking App 11. So I took a short on App 11 yesterday, and I've got it still on here right now. I'm doing pretty well next. I shorted at 492.5, I think. It's 485, so that one's coming nicely. But I mean, you've got to identify when do you really get interested in shorting, when you see damage happening. It's not when they're going straight up. So many people want to short a stock, climbing. I'm going to short that because it's dumb. And that's the wrong way. I say kick them when they're down. Palantir shareholders are down right now. They're like, oh, crap, you know, especially the people who are chasing. They're typically in a lot of these other names too. So it's kind of the thought process is maybe some of these other ones get some follow through, which we're starting to see. And we'll bring this to Christian and Hims because he was just mentioning it. There's another retail darling. It's just gone parabolic and stupid. I mean, it's gone from $58 yesterday to like 72. Started selling off yesterday, showing some weakness here this morning. Keep an eye on Palantir. Palantir turns around, goes green. All these trades need to come off. If Palantir continues to go down, it's going to drag these other stocks with them. So right now, the leader of HIMS, App 11, SMCI is Palantir.
Whew. Take a breath, Dennis.
Run on. It was like I was Trump there for a second. You know, Trump went on that run on sentence yesterday. I was like, I don't know how he can just talk like in one long sentence that long in like 25 things. The guy talks, man. There's nobody that talks more than Trump. Like, holy mackerel. I was listening to Presser, and I'm like, man, he doesn't, like, I talk a lot. He talks a lot. Christian thoughts. Let's go Hims.
Hims.
Oh, can we save Hims? Can we save Hims?
What? Why? You got something for it?
Yeah, I may have.
Baba?
Yeah, let's go to Baba.
Okay, we're going to come back. We got to come back to Hims because Christian's got some thoughts there too. Okay. Let's go Alibaba and just grab the earnings report here for you. Baba is not a momentum trade, even though it's had a lot of momentum recently. It has been a value trade. So it's a different type of stock. Baba, 293 versus 266. Look how much freaking money they make. 38.38 billion versus 38.19 billion. So beat on the top, beat on the bottom. The earnings, you know, I don't know if they've had the call yet, but obviously the earnings were fine and good. And I mean, the stock has just turned to love. And as much as people are coming out of this growth, nosebleed 250 times earnings stocks, Bob is sitting here saying, hello, we're 10 times, 11 times, 12 times earnings. People are gravitating to these names, man. It's the growth to value trade. So actually, Baba is the recipient of Palantir here this morning because it's the exact opposite type of stock. Even though it's had recent momentum, it's the exact opposite type of stock from a valuation perspective. It's a value stock grouped differently. So it's actually the recipient of those dollars here this morning. Moving up, I'm still long. I sold half my Baba. Not quite half. I sold like 40% of my Baba, so I'm still long. Christian, thoughts? We'll throw it to Christian.
Well, I think you made a good point where you're saying, you know, some stocks are down, some stocks are up. Baba's one of those stocks that are up, but you got to remember the S&P made a new high yesterday. So yeah, despite the momentum and some of these names coming in a bit and, you know, headlines on the tape and so forth, the market, you know, SPY still made a new high yesterday. So there is a lot of rotation, I think, that's going on in the market. And yeah, I mean, it goes from certain love stocks, to just a couple fall out of favor, a group falls out of favor, and then another group kind of picks up the pace a little bit. Now, of course, Baba is China, and but ultimately, I think that's what we're seeing with a lot of these earnings results too. Is you're still seeing names crushed on earnings. And Carvana is one of those names that we'll probably talk about too, which is down, which is another momentum name. But
Yeah.
you're also seeing names up as well, and we're going to get to Walmart too, which kind of, I don't think Walmart is a momentum stock, but it has certainly run up a lot.
It's not
But
a value name though.
yeah,
It's
correct.
definitely not a value
It's
name.
not a value
So
name.
the
Yeah.
theme kind of holds even with Walmart here too. Joel, do you want to give some levels on Baba before we move?
Holy mackerel. Did we miss the Lunar New Year? I mean, wasn't that last week or wasn't that going on?
Yeah, they were
Remember?
closed for a bit over in China. I
Yeah, but
don't know, like
I think they're closed, but they go out and buy stuff, obviously.
they do. They're
And
they're buying stuff.
also they got the buzzword, man. What's their thing? Owen is their AI. So they've been doing all the buzzwords. Man, you hit a pre-market high at 140.23. I mean, I'll use that as a good level, and then I'll give you a monthly level there too. 138.04 was your high way back in July of 22. So, I mean, if there's your target in this area, go ahead and take it. I said the same thing about Garmin yesterday, and it just kept on going. Boom, way through the pre-market high. So I'm glad you didn't sell any at 100, Dennis. And boy, just a great move. I
Well, I
don't know.
just sold some on 125 2 days
Yeah.
ago. So I'm like it's 139. And honestly, I knew they were reporting too, and I really didn't want to take the whole position through the report. So many times you get way up in a position, take it through the report, the whole thing, and then you get hit. So I definitely wanted to lighten up into the report, which is what I did.
And if you just want to be like a super perma bull here, I mean, let's call this where's this retracement come in? Oh wow, does this come in at oh, you're above it. Like 180 is about halfway back for this whole move. So I mean, if you look at that bottom right chart, I mean, you could be saying this rally is just getting going here. Look at 3 years, 2 years of consolidation between 75 and 120. Now you're busting out over 120. I mean, this as much as it looks like a big move on the chart on the left, look at your bottom right chart. Be a long-term investor and say, Baba, going back to what 305? What was
Yeah.
the all-time high? 318. And if you think about it, I wish I would have kept my notes on this. She was like Bob Ma was gone. He was like banished, and now that they're sitting there and having a cup of tea
Back in
together.
favor.
Yeah, it's a total turnaround from before. So congratulations. I don't know, AB, if you're listening out here. I know he was sitting on this one for a long time, but finally, but that's it. Is Baidu doing anything?
It's up a
Baidu's
little
just
bit here. Baidu has
yeah.
fallen out of favor because they weren't invited to the big meeting. So they sold
Oh,
off when they weren't invited. So it's like all of a sudden Baidu's on the outs. And you have to watch all the political stuff too. I'm long both. Long Baidu, Baba. They're still very big positions for me, both of them. And I still think Baidu's cheap too, but it's out of favor here right now. Anyways, I want to get Christian's thoughts here on the China trade altogether here, because it's a good point that you're making, Joel, that even though some of these stocks have had big moves, they've been out of favor for so long. Is the China move sustainable here, or is it the same thing we always see? They seem to give these 30-40% runs, and then we look at them a month later and they give it back. What are your thoughts here? Just even talk Kweb, because I know you were positioned in that, Christian.
Yeah, I'm still long Kweb, and I plan to be long. And just as we were talking about with momentum trades, I've got my stop in there. In terms of what I'm watching on the longer term chart. Now, I haven't brought up that stop price, but I'm my stop is down at like 30.50. So again, I could probably definitely move that stock up. But some of these names, just besides Baidu, like Billy reported earnings this morning, they're up. So Baba has definitely been the leader, but there's also been names like Futu and TIGR that have done pretty well. So for now, I want to see if Kweb can get above those 2024 highs. I think that would be really constructive. But just as Joel was saying, with these names that are retracing a lot of these moves, it could be that this is just starting to get going. So I'm not real. That's why I don't have a trailing stop right now in Kweb, because I want to see if it can just, I'm willing to kind of take time and say, especially with some of these charts, like if you look at the bottom right chart that he's got, that weekly chart, that's a base. Like I always zoom in, like I know that you've got your peak over there, but I put that peak all the way to, I would put that to the left of my screen. That's okay. But
That's the weekly.
Yeah.
You want the monthly?
No, I want the weekly. But
Okay.
what I do is I zoom in. Like you've got 3 years. I would look to see if we could really kind of base. There's analysis called stage 1, stage 2, stage 3, stage 4. Right now, that's in stage 2, and I want to stick with that as long as it's kind of getting out of that base. So I'm here for the bigger move, and that's why I'm not trying to super manage my Kweb position. But I like that. And, do I wish I had a Baba position on this morning? Absolutely. But Kweb is doing well, and that's how I've decided I'm going to play the group.
This is such a good, I want you to just expand a little bit further, because even where you say your stop is like 30.5, you're like way down there. And obviously you're up in the position too. So I don't know where it was when you originally, but when you're entering these momentum trades, how far, and whether it's a mental stop or a physical stop, how far do you place that stop out so that you don't get, like I got obviously stopped out because I was way too tight, even though I left and can use the doctors for an excuse. The fault was on me. I was too tight with my stop. Where do you go where, usually how far out when you're trading these things? Like a few percent? Like how far do you go out?
Yeah, I'm just going to show my screen for a minute.
Okay.
But
Please.
I mean, it's not a momentum trade. It's a swing trade, right? So, and what I'm looking at is a long-term swing trade. So would I like it to get up to 40? So this is what I was talking about with base. So notice the decline, right? So this is stage 4. This is Stan Weinstein and how he does technical analysis. So stage 4 decline, and then you wait until it bases. And this is what happens after stocks decline for a long time, is that they're usually based like this. And in this case, this based for like 3 years. So this could go on for a long time, but now it's doing something different. So ultimately, yeah, I'm targeting this version point of control up here, this blue line, which is 44.40. So that's how I'm handling it. And I'm gonna try to stick with, and even if it does check back here, which is why I don't have a trailing stop, like I actually want to add to my position if it comes back and checks back into support. And again, you have to kind of believe in the theme. And right now I do. I think emerging markets, we've talked a little bit. Sorry, I don't want to go off tangent because we've got a lot of
No, it's good though.
talk. But I think emerging markets, like it's not just China. I mean, I talked about this the other day, but look at what Singapore is doing. Right. I mean, so a lot of these emerging markets, Singapore is at everybody talks about China, but Singapore is at an all-time high. So there's a lot of interesting things going on in emerging markets. But I want to get back on track with all the names that you guys want to cover.
So other stocks reporting, and again, we're seeing themes here, but we're going to go to Walmart report because we haven't covered it in detail here yet, and it's important. Walmart, I would put in the more Momo category. It became a Momo stock, and it's definitely not in the value name. Like you typically think of Walmart as a value stock. Everybody's going there. It's a core. It's a staple for sure. But the forward PE on Walmart is now 37 times earnings. It's probably, I'm going to just say on Walmart, I don't know. The last time Walmart was, I remember when it was 45 times earnings, was in 2000 in the tech bubble burst, when a 45 times earnings stock was cheap because everything else was trading 200, 300 times earnings. So 45 was cheap, but they even brought those names up. Walmart, relative to itself, is as expensive as it's been since the tech bubble burst in 2000. So 25 years ago. Walmart, I remember about 5 or 7 years ago, I remember, Josh Brown talking about, I love Josh Brown on CNBC. And I think the stock was around maybe $40. And he was talking about it trading like 12, 13, 14 times earnings. That's where it was. That's where it was. So all of this move from 40 to 104, the majority of this, some of it's been earnings growth, but the majority of this has been multiple expansion, where the stock is simply, they're paying more for those same dollars earned. At a certain point in time, it just doesn't make any sense. Costco's always traded 40 times earnings. They've grown the company a lot better than Walmart has grown the company. Walmart's had a lot of hiccups along the ways. Walmart's had periods where it's had big moves and then 10 years periods of nothingness. I would not be surprised if Walmart goes into one of those periods where, it goes into like a 5 or 10 year period where the stock really doesn't go up. It has to digest and let the earnings come up. You're paying 37 times for Walmart. This isn't some super AI stock, folks. I just don't think, it makes any sense to be paying that kind of valuation for it. So what we could say is, and I know jobs claims just came up, what we could say is it was priced for perfection. Walmart was far from a perfect quarter here, just giving you the numbers, and then we're going to have the guys break down the technicals on this. But, Walmart earnings were 66 versus 64. They beat. They raised the dividend. Net sales increased 3 to 4%. That was all fine. But then they adjusted 2026 EPS guidance down, the Q1 guidance down slightly. You cannot, when you're priced for perfection, cut guidance. And that's just down only 6 cents from 64 cents down to 57 to 58. But you can't do that when you're priced at 37 times earnings and you're literally a staple. And with no growth, very little growth. So that's why I think, at this point in time, Walmart kind of more falls in the Momo trade, and it's coming off here because it was priced for perfection.
So you're not buying the dip in this?
No, I think Walmart, I've just seen the stock in a history of the stock goes for periods where it has huge moves and then 5 to 10 year digestions, and then huge moves and then 5 to 10 year digestions. I don't think it's going to tank down to 60 again. I'd be a buyer at 60, but I think it's probably, at this point in time at 104, fully valued. Sometimes you've got to just analyze fundamentals too. What's the sexy story in Walmart too? They've all of a sudden grabbed it and said, yeah, everybody's broken. They're only going to shop at Walmart. Some truth to that. There's been some trade down where people making $100,000 a year shopping more at Walmart because stuff's just so expensive. Lots of people, there. But I just think we're at a point where how much do you want to pay for every dollar's earnings? I think it's gotten too far.
I agree. I mean, I think to watch a stock usually goes up like this, like a Walmart, for example, when it's like a risk-off environment, and
yeah,
it hasn't really been that, and it's kind of been odd to see it. It's acted more like a momentum stock, and I agree, it's expensive. I think it will be interesting to watch. Like I'll have this name on my radar just to see if buyers come back into this name, and because it is acting, even though it's not what you typically think as a momentum stock, but it has acted that way. So it'll be interesting to see if buyers kind of come in and support this name. And I do see support at $94. I think that'll be an interesting level to watch today.
I think rallies to be sold. So, I hate selling. If you're in the stock, and the stock sells off 8% in just one foul swoop, it's usually we'll get a check, give you a check back, give you a bounce. I think those bounces to be sold. Like this thing checked back to 100.
I agree.
I think I would be lightening up into the Walmart because I think the 105 high could hold for a very long time.
Did you pick that 94 because it was the pre-market low, or did you have another daily? Did you have a daily level in there?
Here, I'll show you my charts.
Yeah.
No, I mean this is the top of the value area for February. So this is basically, this value area is based on all of January's activity. So it's price is checking back to the top of that range for sorry, not for January, for the year. Yes, for January. Sorry about that. But you can see right here box on my screen. So notice price coming right into there, right? So it's supporting that previous range right now, and that's why 94 is going to be a big level.
Okay, that's the pre-market low. Also, hey, if you were looking to buy this at the 50-day moving average, it was trading in that area not too long ago. I like the Dennis thing. Is like, maybe I'm not really looking to buy this unless it got down to the 92.40 area today. I would definitely have bids out there. That's a triple bottom back in late January. And now just to check back. I mean, these are very important moves. Just like the Palantir, you hit a high, you pull back substantially. Or the picture has changed. And like looking to buy. People are now like, wow, I may be looking at, man, I didn't sell at 100. I should have sold at 100. Maybe 98's good. So the psychological pick, and they told you things aren't going to be great for a year. So that's, I mean, look, I like to see a nice retracement in this one. So far, you are almost, you're $2 off that pre-market low. So we'll go with his number today.
It's so hard to be bearish, though. We're going to move Jim on here right now. I just want to make one more point, because every analyst is just like, there's like 90% of them, man. They just, buy the dip, buy the dip, buy the dip. And why? Because it works. So you got Citigroup that reiterates their buy rating, buy the dip. Goldman Sachs reiterates their buy rating on Walmart, buy the dip. This is all coming out in the last few minutes. Truist reiterates their buy rating. Bank of America reiterates their buy rating. All of them chiming in and saying, buy the dip on Walmart, it's going. Goldman Sachs says they think their 250 guidance for the year is going to be conservative. They think they can make up to 280. Even they make 280, it says 35 times earnings. I mean, okay, 280, maybe it's 33 times earnings at 96. But I mean, come on, man. This is Walmart. This isn't like some super sexy AI name. You want to buy Walmart at 37 times earnings? You want to buy NVIDIA at 37 times earnings? Think about that. Let's bring up Jim.
All right, here we go. Jim Tassoni, CEO, Armor Wealth Strategies. How's your morning? How's your Thursday going?
It's going pretty well. We're trying to stay warm over here, buried under the snow, ice, and cold. But I know Dennis knows something about that. I've seen some of those pictures on Twitter, but or X, excuse me. But yeah, we're good. We're just gearing up for a couple big nights in sports. In our house, we got U.S. Canada tonight, Michigan State tomorrow. So be good couple nights.
Who's not wearing their Sparty or their Michigan gear?
Well,
I can put this on. I've always
there you go, Jim.
That's I can do the presentation like this if you want.
You know what? I thought about it, and the actual game, I wear a game shirt on the actual day of the game, so I don't want to wear
like
but this is from the Final Four in 2018, so nice. I do have some memorabilia on, but I'm a little worried. I'm a little worried about State's got a lot of talent. Michigan's been winning a lot of close games, so but let's get to the markets, Jim. And I love your first topic here, and I really want you to go in depth on this because you want to take a look at Trump policies so far and the potential impact on the market scenarios probabilities.
Yep.
What the hell are they?
Yeah. So again, we've talked about it for a handful of weeks now, and I continue to be somewhat torn in this market. I mean, and you guys hit on it perfectly. It's like there's a lot of cross currents going on. There's a lot of things that you can point to that are negative, but the market just continues to chug higher, and you can find places to make money. So it's kind of nice as more active investors or stock pickers or traders to have a market like this because we can find opportunities that aren't just, buy the S&P 500, the Mag 7, and then go to sleep like we had for a number of years. So I'll kind of go through what I think are the 5 policies or the 5 major policies of the Trump administration so far. And I actually think, and I know we kind of had this discussion last time, but to me, 4 of the 5 are inflationary policies. And that's why I continue to be in that camp of, I think inflation is going to remain sticky. I think it's going to remain higher, remain more elevated. I think that's negative for interest rate stocks and negative for longer term bonds, at least over the next few months. And I think, one of the things that the Trump administration wants to do, I don't know that they're going to be successful, but whether it's Trump or Bessent, they're trying to lower interest rates to boost growth and stabilize that public debt to GDP ratio. If growth continues on its trajectory, though, and we see growth pick up, to me, I still believe that's an inflationary impulse on the market. If we see growth get stronger, I think that's going to drive inflation across the market. The second thing is, and we've all heard about this, curb immigration, right? That's a big thing in the Trump policies. They want to curb immigration. They've talked about deportations. But if you look at the majority of our job growth over the past handful of years, if you dig into the numbers, it's been driven by immigration and immigrants in general. So if we strip that out, we could potentially be looking at a different type of workforce. And if growth continues and we need that workforce, what's going to happen? Wage inflation. We're going to have to pay people more money to do the same kind of jobs in that type of a situation. And another thing that they're looking at is tariffs and dollar depreciation. They're trying to create manufacturing jobs in the US. But again, more manufacturing in the US to me means higher price of goods. Again, inflationary, because people here aren't going to work for, right, wrong, or indifferent, the same wages that they are overseas in Asia or in Mexico, so on and so forth. Obviously, another big one is extending those 2017 tax cuts and looking to lower taxes in other areas. We know that that could potentially be inflationary. The final one, though, that I think is somewhat deflationary is that reducing of the red tape, getting rid of a lot of regulation, a deregulatory regime, and limiting government involvement in the economy. I think that that is going to be overall deflationary. So that is the one thing I see in his 5 big policies that they've talked about that might be deflationary. So now I'll real quick, and then I'll pause to answer any questions. I've kind of got 3 scenarios laid out based on that. The first one would be, as I said, a second inflationary wave, which is sort of the camp I'm in. But when I actually crunch the numbers, and this is why I always say you can have an opinion, but you've got to be directed by the data and the markets and follow where they're going, because opinions get run over. And I've had that happen to me more times than I'd like to comment on. But the first one's a second wave of inflation. I put that at about a 40% probability of happening. And I think if that happens, the few implications for the market would be, again, I see the U.S. Treasury yields in that situation spiking to 5.5%. I think you get a dollar sell-off in an inflationary wave. I think U.S. stocks come down. But to Christian's point, I think in that environment, actually, if we see inflationary pressures and some of the inflationary areas of the market start to outperform, I think you may be able to place some money into the emerging markets. I think in that environment, a second inflationary wave in the US, I think some of these emerging markets may actually outperform their developed peers. So that's number one. Number 2 is what everybody's sort of hoping for, I think, is that soft landing, that policymakers are able to kind of successfully switch from that easy fiscal tight monetary policy to the opposite, a tight fiscal, easy monetary policy. In that case, and I assign that about a 25% weighting, in that case, I think you see U.S. Treasury yields and the US dollar still both decline. I think in that situation, a soft landing, I think you see the S&P 500 up, but somewhat modestly so. I think US markets will perform reasonably well, not like we've seen the past 2 years. But then I think you've got global markets like emerging markets and other things underperforming the US markets. So in the case of a soft landing, I think you still want to be US centric. And then finally, that final 35% would be that rough landing where we're not able to manufacture or manage this environment that we're in, this difficult regime that the policymakers are facing right now. In that case, I'm on the other side of the table. I think there's a flight to safety. I think that's where you see Treasury yields dip maybe as low as 3%. I still think you see the US dollar depreciate, though. So there's a theme here. I think that although right now I will say I'm long US dollar as a hedge, I'm watching this very closely because I think as any one of these scenarios play out, I want to exit that dollar trade on strength. I think that's my hedge against some risk here. I think in the event of a rough landing, you see U.S. stock prices tumble because I think corporate profits would contract meaningfully. And we know where we are from a valuation standpoint right now. If we see corporate profits start to contract, I think we're going to see a market correction of a significant nature, in that 15 to 20% world. And again, I think in that world where we have a rough landing in the US, I think you could potentially see emerging markets again outperform. So my call in two of these three scenarios is to look globally, is to look in some of these pockets that Christian was talking about earlier. I think there's some opportunities that we haven't had globally that we can now begin to focus on. And I'm starting to look in those markets. So overall, I still think that we've got that 40% probability of inflation, a second wave of it. That's where I'm majorly positioned right now. But I'm on the lookout for these other types of market regimes to unfold over the next 2, 3, 4 months.
I think it's interesting. You bring up international, and that is outperforming the U.S. so far, and pretty decently, both emerging and developed markets. And you've got a couple.
Hey guys, can I interrupt this discussion for 1 second?
Of course.
I have a special guest here that can only come on for 1 minute, and Jim, I want you to stay on, and we'll continue this discussion. But let's go with the guest intro here, and here we go. Okay, where is my special guest? Hello? Come on, special guest. All right. My special guest is not coming on here.
I see the name. There's no video.
All right, Jim, keep going, and then I'll just pop you on and interrupt you again, okay?
Lisa's there. She wanted to say hi. I can see her there.
Okay.
Lisa, can you hear us? Not working. I was so excited too.
It was working.
I was
Hold
too.
on. Oh, these impromptu things. Hold on.
I can't hear her volume. I can see that she's there. I can't hear her volume. Okay, we'll put Lisa back to the background. Joel, figure out this, and
right,
we'll
Christian, go ahead with the question you were
So I was just mentioning how much international markets are outperforming. You've got a couple ideas, and by the way, just to recap a couple of things that you said is that you're worried about a few things and some policies, and so it's kind of like you're tackling this from a little bit of like a long short, which is kind of interesting. You mentioned earnings is going to be a driver, and if we start to see earnings fade, we were just kind of talking before you came on about we've been going through some of these earnings reports. Some are good and some are bad. So you've got a couple things to the long side in the international space. I know that you've talked about these themes before, but EWC Canada, EWJ Japan, is that primarily where you're focused in international, or is there anything else that you're looking at as well?
Yeah, I've got positions in both of those. I've also got a position that I started last week in EEM. That's sort of how I'm playing emerging markets right now. I'm not as aggressive as perhaps some other traders. I haven't dabbled into the individual emerging market names or ETFs at this point. So I'm sticking to kind of the bread and butter EEM. As far as Japan and Canada go, I realize there's risk, especially on the Canadian front. And you mentioned the long short. My trade in this market, if you're worried about the tariff thing, I think there's an opportunity to hedge some of that out with potentially looking at a short, if you're able to, and you're aggressive enough to do so, in either EZU or EWU, because I think the Eurozone and the United Kingdom in general, I think that area of the world, that area of the market, if Donald Trump and the Trump administration enact aggressive tariffs, I think a lot of the focus is going to be there ultimately. I think Trump is much more focused on getting Europe to come to the table, pay their fair share, as he likes to talk about. And I think he's got a lot of negotiating power over there with some of the geopolitical climate going on. You're seeing a lot of movement towards the right wing in a lot of those governments, especially in the German government, which is the biggest economy in that Eurozone. I think there's an opportunity for them to come and have that negotiation. But if not, I think you can hedge some of this tariff talk with potentially being long these other markets, emerging markets, Canada, Japan, against a Eurozone.
That's not a bad play. I know Lisa's coming on the background, but that's not a bad play to think about, because if you're worried about tariffs, I mean, maybe it's the hedge, where you go and you say, okay, well, the tariffs are probably going across the board. He's talked about Europe as well. Maybe if you're bullish in a certain scenario, that isn't a bad play to short the other side of it. So, I just think overall here, like everybody, we got a little bit of irrational exuberance in this market overall, where people are super excited. And we saw that come off a little bit yesterday with the Palantir selling off. Walmart got super excited at selling off here today too. But you've got to just think about, like, on my core strategy, what I'm always doing is news anticipation, headline anticipation. I just don't think that, like Trump told us yesterday, he told us flat out, we don't have to read between the lines, we can read the lines. He told us flat out yesterday during that presser that he intends to bring in tariffs in autos, drugs, and a number of other things. He has not forgotten that. So I think, looking, we're like 15 days to go or whatever till the deadline for Canada and Mexico. But I just don't think, like, coming in here and buying, certain companies and even drug stocks, you got to be careful with that stuff right now. Even if the charts look good, news headwinds can just come in and torpedo that whole idea. So I like, that you're thinking, if tariffs are a risk, let's figure out how to hedge that risk away here, Jim, because, I'm very worried about, Canada right now. Like, I am seriously thinking of initiating, and I hate doing that against my own country, but I'm seriously thinking about shorting EWC, because I don't think there's going to be a deal. I think he is intending to bring Canada in as the 51st state. He keeps saying it. It's not a joke. And I think he's going to try to break Canada economically. And Canada needs the U.S. I mean, if he tries to just keep throwing tariffs back, it's going to be really bad for Canadian stocks. So, there's a lot of things to think about with potential headwinds from, this whole tariff talk. This tariff talk's not going away, though, Jim.
And I agree. And I guess, ultimately that's what makes a market, right? Is that we can have opposing viewpoints. We can have different ways to put the trade on, to look at the trade. But one thing that I do 100% agree with you, and I was going to talk to that, is an area that I'm avoiding and or looking for shorts in is the autos, the auto manufacturers.
Yep.
I think they are
Ground zero.
hugely susceptible to this tariff and geopolitical risk. So that is one area I would avoid. Look for short setups, hedge against if you want to be long another area. That's one area that I am 100% avoiding.
Joel, we're all anticipating at least.
No. You messed it up. She had to go back to work. But Jim, any final thoughts here on this Thursday? I know you had some individual issues that you wanted to cover. Anything you want to update us on?
No, I think, a lot of what we talked about last week continues to be our playbook. I think I've got kind of what I'll call a little bit of a Texas hedge on the energy markets. That continues to be our favorite sector in this environment in the US. We're playing it through some of the larger names. It's pretty boring. Your Exxon, your Chevron, your Conoco. We also have a long in crude, which you could express in USO and or just buy XLE if you want to have the ETF and the broader base play. But that continues to be our favorite sector. We like some of the metals still. We've been long gold for a long time, continue to have a pretty large position in gold and a position in copper too. We think copper is another place to play, this potential market regime that we see playing out. So those are kind of the areas we're looking right now. We think the next couple months are going to be interesting. A lot of risk, but we're not going to over tip to the bearish side, because right now being long is still paying you. So
Yep, right up in. I mean, all these negative things, and just a bit underneath the market, making a new all-time closing high yesterday. So you could talk about all the negatives, but when you look at the price action overall, not for all stocks, but here we are. Jim Tassoni, he's the CEO, Armor Wealth Strategies, joining us every Thursday, giving his fundamental and technical outlook on the markets. Jim, we'll be chatting tomorrow, I'm sure, the big game. And
absolutely.
I won't say go blue and cut you off. I'll say go blue, and then you can say,
Go green.
all right. Okay. Thanks, Jim.
Thanks, Jim.
All right, guys. Take care.
Okay, we're just kind of hanging out here, meandering just about down 18 handles. Dennis, you made a good point yesterday when you were talking about the imbalances, and you said, "Hey, there is an inordinate amount of sell imbalances there."
Only
And
one stock, Bank America, and you want to know something? It's back.
really,
So it's now a trend. So we had over 1.3 million shares selling Bank of America yesterday morning. Stock opened near the lows and then bounced. Same thing again, 485,000 to sell. So now it's a trend. When you start to see those imbalances come 2 days in a row, makes me think there's some institution just unloading, and they're doing it at the open every day. So Bank of America down here significantly again. Wouldn't be surprised if it opens near the lows again here. So just keep an eye on that. If it opens too low, I may take a shot at it too. Big seller in there in Bank of America once again. Nothing else, just Bank of America.
what did you have for an opening print yesterday? Because I know that different exchanges throw up different prints. I was just wondering what you had. Do you have that in front of you? What the open was?
No, I don't.
Okay,
So I
all
have a
right.
consolidated on mine. I have a consolidated. If you ask me of the day, I can always tell you because
Okay,
on
I
my
hate that. I
software,
know.
I know the
Yep.
day, but I don't know yesterday's because I just see consolidated data from yesterday.
Okay,
So
all right.
okay, we got lots of earnings here. Earnings parade.
Well, we
here
got to
early
do
morning.
hymns. We got to do hymns,
Oh
and
yeah, go.
that's why I wanted to bring Lisa on for that
So Lisa can't come
segment.
back on. She was only had a 2-minute window.
Yeah, yeah, she was
Okay,
busy.
apologies.
So
Apologies. I did
Dennis,
not know
I'm
she
going to
only had a
turn this
2-minute window.
into Quiz Dennis. Quiz Dennis. Okay. So why? Do you know why this stock rallied yesterday?
It was some drug news.
Well, Christian, you know what the news was, right? Quiz Christian too.
Yeah, it was something that they're
Some drug news.
at home blood testing, I believe, was the headline
Yes.
yesterday. Yeah.
Yes. Okay. Right. And they took the stock. It went parabolic off it, selling off $3. What? And the reason I asked Lisa about it last night, and then I forgot to ask her to come on this morning, and she talked about some people in the office. What does that remind you of? Go back a few years.
Yeah, it reminds me of Theranos.
Exactly.
Yeah.
Exactly. Remember Theranos and Elizabeth Holmes?
Yeah, that
But
was
was
the
a
first thing that
fraud
I thought of
case.
yesterday too, Joel.
Well,
That's a
how do you
great
know
point.
this is? How do you know this is what it's supposed to? That it's actually supposed to do what it's supposed to do.
I don't know. I don't want to make any accusations on that front because I'm not a specialist on any of the blood, but I would love to hear Lisa's take on this. So we'll get Lisa back on here when she's available. Obviously, Lisa's a very busy schedule, so we're going to get her a chance. Maybe she can come on tomorrow. We'll have to see what her schedule looks like.
Yeah, well, you can't get that, the same results, that you can in the lab. So, if you bought it off that, then it's fine. It's selling off today. But there you go, down 269 today. Stock has just been a beast, but we'll see how long it takes to roll that out. Do we want to do any tickers?
Yeah, ticker time. Let's go.
Carvana.
Start with this one. I'll give you the earnings report. CVNA reports earnings of, bringing it up, 56 cents versus 21. Nice beat. 3.55 billion versus 3.31 billion. They actually raised guidance too. So beat, raise usually means the stock goes up, but this is Palantir day where you've obviously seen the Momo coming out. So this is more of a victim of the day that it's reporting. This reports yesterday. It's probably over 300. But it reports today, and Momo trades are not in favor here this morning, so they hit it. It matters what day you report. That's my thoughts on Carvana.
And the stock really ran into the report too. I mean, this didn't hesitate. I know that you guys talk about this quite a bit. Is sometimes the trade is the run into the report. I think Carvana did an excellent job at that. And yeah, we'll see where this settles in. It is off the lows. Also, Walmart is bouncing a little bit too, which I find interesting.
That's probably way over the expected move in Walmart. I don't know what the straddle was priced in, but that was a big move. So, people that finally saw some daylight on the short or had some puts were trying to lock it in there, but still has a ways to go to get to the bottom. 102.50 is going to be a good number moving forward because that's where you had a pair of lows on Tuesday and Wednesday. Looking at the Carvana chart, can we get back to yesterday's low? We'll see. 280.20. That's another $15. That's going to take some heavy lift in. And wow, we got a big spike up to 310 on that. Well, was it 310? Wow. Yep, 310. Don't think we'll see that. I don't think we'll see the pre-market low with 246.51. So, digestion mode for Carvana after earnings. So tomorrow, you know what tomorrow is? Tomorrow is options expiration, and we're going to bring on CC Legator. Always bringing him on and see what his look. It's interesting because we've had a lot of negative news in the market, but man, it's really the down open was bought yesterday, and we'll see if we can creep back again. So we'll find out what the options market have to say tomorrow morning.